Hi there, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 4th of December. All right, now as we come in to the non-farm payrolls, let's just have a bit of a look around what's going on. Now, the US dollar, the dollar index, you can see very clearly on the hourly and dailies, broken down and continuing lower. Now, this isn't going to change if the core news that's driving this, which to me is the big stimulus package in the States, which is a bipartisan, looks like it's going to be a bipartisan agreement, that is driving things. Now, until that changes, right, until it's released or until they sort of flip over and say, no, we're not going to do it, you'd expect the dollar trend to continue lower, right? And that's going to just give us the same opportunities here on the other pairs. Now, it doesn't mean these moves on the majors, like the Aussie Kiwi's got a beautiful trend, very steep one there on Euro, and even Sterling's joined in, dollar CAD to the downside. And we're even finally getting the dollar to break down against the yen. So these trends now, they're not just going to go 200 points one way, then 200 the next day. They will have situations where they retrace, right? Now, your job, right, this is the key part to being a proper trader is when it gets back to these levels, say like the Aussie, here's got a couple of different levels to pull back towards support. Assess the market at that point. Has the news changed? If it hasn't, well, then it's just a retracement and you would expect the currency to continue higher. Now, the Kiwi's getting close to support, and this is where traders get nervous. Once again, you know, we're waiting for that news to change. And that's the same for all these pairs. Now, what news could change? Well, if you haven't been around for a while, the one big news item out there that is coming up, big macroeconomic fundamental, what I'm talking about is the US non-farm payrolls, right? This is the big, I would like to say, a big hairy number, right? There's a lot of different components. It's the big cranky bear that actually shakes the market down. Liquidity gets pulled out at the time of the release. It jumps around. It's all over the place, right? It's a bit of a discombobulation of the market. But you know what? If all these things lined up, right, and you only usually know about 30 seconds afterwards when you review them all, that's when you can get a very clear directional opportunity. So what have we got? We've got the stimulus package as being the core driving factor of this trend, right? And now we've got the non-farm payrolls on top. So what can we make of this? Well, to me, really bad non-farm payrolls makes that bipartisan stimulus package an absolute necessity and maybe even bigger, right? So that could even push the dollar lower. The opposite, if it's really good numbers, well, then they might go, you know what, maybe we don't need to stick so much money in. Okay, that's the sort of hypothesis on that. Now, also the stimulus package, right? I'm going to keep telling you this. It is the driving force at the moment. Now, don't forget, it's been very, very quiet of late about the coronavirus claims and, you know, a number of infections across the states globally. This has gone quiet while the news has been focusing on the stimulus package and a few other things. So just bear in mind, that's then another dark horse that could swamp the stimulus package. But, you know, when you break it down, the stimulus package is to protect the economy and get things moving. If there's more coronavirus cases, well, there's probably more need for the stimulus package. So it's a bit of a hard one, a bit of a conundrum to sort of assess whether we see dollar weakness or strength. To me, if the US states start locking down individually coming into the Christmas holiday period, well, then that's a big blow to the economy. They'll need that stimulus, but we may see the dollar come back on that, right? So it's a bit of a, as you can tell by the way I'm talking, it's a bit of a hard one to really assess and put your finger on it and say, well, yeah, the dollar goes up or down. Right now, it's the stimulus package that is pushing the dollar down against all pairs, right? So just make sure you keep a close eye on that. And if you do come back to, and have a look at the equity markets, right? The equity markets are now really aren't moving, right? That's the thing. The equities are like, well, I don't know what's going on. And as one thing, as you lead into the non-farm payrolls, right? These trends have been in play for all week. You might see some retracement as traders take that risk off the table, right? And lock some of those profits in. So I wouldn't be surprised to see a little bit of a rally back into Friday as we lead into, you know, the 2 days over the weekend. There's a huge amount of time for news to come out, especially about the stimulus package or something else, and that could really impact the market. So, you know what, this current risk, I mean, the current trends across the board are in play and should stay that way as long as the news doesn't change. Coming into the weekend, I think there's a chance we may see a bit of a retracement. Nothing to break these trends, but just take some cash off the table. And keep an eye on those non-farm payrolls because, as I said, they are a lively number. It's not easy. If you're a new trader, I would stay quite away from it. All right, guys, good luck. Cheerio.